was like 8 grand to tear these houses down and throw them in the dump. And some guy walks up to me one day and says, I'll buy each of these for 4 grand each, and I'll worry about moving them. I said, well, so I can make 8 grand instead of losing. That's a 16 grand swing.
Hello, and welcome to Real Estate Investing Deal Deep Dive. I'm your host, Jeremy. The Deal Deep Dive offers lessons learned from Canadian investors while scaling their portfolios. If you're looking to scale your investments, listen to stories from those who have already been there and what they did in your shoes. Darcy, welcome to the show.
Hello, Jeremy. How are you doing?
I'm doing well, thank you. How are you?
I'm doing excellent. Really, really good.
Sounds good. So just before we get into today's show, I do want to inform the listeners that they need to really listen to some of the words that our guest has to say. Darcy, you have, in my opinion, one of the best investment strategies out there, period. It is fast, it's efficient, and it requires very little headache. So I really hope that people listen to some of your credences.
Good. I wish everybody was like you. That was really great. Thanks.
So Darcy, can you tell us who you are and how'd you get started in real estate?
Yeah, so my name is Darcy Marler. I'm based out of Calgary, and I've been investing in real estate for 21 years now, full time. In that time, I've done a ton of stuff. I've owned like close to 100 properties, 240 units. I've had close to 1,000 tenants in my life. I've done all the other strategies, fix and flip, long and short-term rentals, condo conversions, all the stuff. I've also been doing a lot of stuff in land development, new construction. I built 45 homes. I was instrumental in getting the racetrack, the horse track and casino built here in Calgary. I've written 4 books on real estate investing, and I've got an online course on property development. So I'm keep busy. I know I've done a little bit of stuff.
A little bit of stuff is right. A little bit of everything. Jeez.
Yeah.
So
I got focus problems. Yeah, that's me.
How are you focusing currently? You know what? We'll dive into that in a little while. I know you got tons of stuff to lay out.
Yeah.
So where are you currently investing?
Basically, I'm practicing what I preach with my new course. So I'm actually looking at Edmonton actually as a really great place to do some of the stuff, and it'll make more sense, I guess, as we go into it, kind of what I'm doing. But yeah, I'm looking at Edmonton. I'm also looking at doing pure raw land development down in the United States, either like Florida or Texas kind of thing. I really like those two opportunities. There's massive movement in the United States. People are just, politically, the left and the right, the red states and the blue states, people are literally moving. Like I don't like it here. Wherever I am, typically a blue state, a Democrat state, I'm going to go to where people think like me, and they're literally moving. So I don't know, maybe by 2050, you'll literally have Democrat states, you'll have Republican states, and that's where you live. It's actually pretty interesting. But so, but that's, as a land developer, that's kind of what you want to see, right? You want to see consistency. You want to see things. Texas is supposed to double its population by 2050, right? And as a guy who's done most of his investing in Alberta with the up and the down and the up and the down, give me consistency. Give me that. I'm all over that for sure. So yeah.
Doubling their population, that's huge. Texas is already one of the biggest states there is.
Yeah, and so there's a massive, if you look at the numbers, there's a massive move from the blue states, California, New York, Chicago, Massachusetts, to places like Florida and Texas, Tennessee, North Carolina, Nevada. And the common theme is it's cheaper. There's no state tax. It's warm. You can buy a 10-foot by 10-foot apartment in New York City for $3 million, or you can spend 350 grand and get a really, really nice house in Texas, right? So I mean, people are saying, okay, that sounds like a good deal. So you're really seeing a mass movement down there. And that's what I say, like, I just want consistency. I'm tired of the up and down. At my age, I don't want to try to guess what the world's going to be like in 2 or 3 years. I just kind of want to get I want to know that it's going to be consistently okay. Everybody's moving to Florida and Texas.
Sounds good. And I'm a big fan of consistency here myself.
Yeah.
So how did you get into land development?
I started off like most people doing flips. And when a flip didn't work, the backup plan was rentals. So flips and rentals, that's really all we're ever taught. And going back 2002, 2003, I had this flip. Just a 1950s house. I was going to just repair it. The guy next to me passed away. So I bought the next one off his son. I was going to flip that too. And I said, you know what? This is an opportunity for me to build new. I'd never done it before, but I kind of always wanted to. And, you know, God protects the stupid and the innocent. I'm not sure which I was. But anyway, so I ended up moving both of those houses off instead of tearing them. Actually, funny story there. So I'd got the quote. It was like $8,000 to tear these houses down and throw them in the dump. And some guy walks up to me one day and says, you know, I'll buy each of these for $4,000 each, and I'll worry about moving them. I said, well, so I can make $8,000 instead of losing. That's a $16,000 swing. Sign me up. Moving day comes, the moving company comes, they put the massive I-beams up and put them on the truck. It's actually a really cool thing to see houses being moved. It's very, very, very cool. And I'm talking to the owner of the moving company. And he says, you know, I'd have bought these for $15,000 each, right? I said, what? He says, yeah, that guy there, all he does is once a week, he goes down to City Hall, pulls the record for all the demolition permits for the week. Then he goes to the person like you and he buys them for $4,000. Then I buy them from him for $15,000. Like, so next time, skip the middleman, right? So I could have made 30 instead of 8, but whatever. I was still happy with my plus 16. But anyway, so I moved these two off. So I had 2 side-by-side lots, nice pie-shaped lots. I subdivided those into 2. So now I had 4 lots. 2 of those already had utilities going to the original houses. So I put utilities in the other 2. I could have sold that. That's one of the strategies I teach in my course is sell those lots to a builder. I decided to actually go ahead and build. And so I built 4 houses. I built 2 single family homes on the outside with a duplex in the middle. Turned out really pretty, really nice. And then, so yeah, that was kind of my first foray into kind of land development, new construction, that kind of world. And I didn't know anything about anything. There was no books. This is the early 2000s. There's no courses. There's no Darcy teaching you how to do it right. So I mean, yeah, I was just kind of skin your teeth learning. And you know, if you make a mistake, you write a check to somebody to fix it, right? So that's how I learned. So.
Was there many mistakes made on that one?
I made a big one actually, yeah. So I didn't know, I laugh about it now, not at the time, but anyway, so I didn't understand what acrylic stucco versus conventional stucco was. Conventional stucco, they kind of throw it on. Acrylic, they take more time to make a really, really smooth finish. So obviously that costs more, right? So I'm a builder, so I'm actually going to sell to the families that live there. I realize I got to have a website. So there's a guy 3 blocks away that's doing the same thing. So I cut and paste his information from his website to mine. I make all the changes. So, you know, here's the thickness of the diameter of the pipe. This is how thick the concrete floor is going to be. So all that stuff becomes actually part of the contract because the house isn't built yet, right? So to get a pre-spec home, the people that are buying want some assurity of the quality that's going to get put into the house, right? So as part of the contract, you've got actually the blueprint, and then you've got this amendment is all the specs, right? So I went through and modified it to my specs. He had acrylic stucco. I left it there. I should have said conventional. And what's the difference? Well, on 4 houses and 4 separate garages in the back, the difference is about $80,000, to be honest with you. So it was a pretty big mistake. Yeah. So I was contractually obligated now to do the nicer version over and above what my budget had been. So again, lessons learned. Get a mentor instead of figure this stuff out yourself.
$80,000. Wow. Okay.
Yeah, that's a pretty big swing.
Yeah. Jesus. Okay.
Yeah.
I'm glad to hear you made it through that, though.
It's all water under the bridge now.
That's good. That's good. One of the best things about being in real estate, as long as you have anyways, everything that you did learn and got the opportunity to learn from, you know not to do again. So
I know not to do again. Yeah, that's the key. It's okay to make mistakes as long as you don't do it a second time. So.
Sounds fair.
I used to laugh. I used to be a computer guy, right? And if I screwed up a couple of times, you know, I accidentally deleted some information off a client's machine, right? Okay, well, you're staying late at your own cost to fix it, right? It's not really money out of pocket. It's just lost time. If you make a mistake in real estate, you're writing a check to somebody to fix your error, right? Like, so crap. And so the trick is not to write that same check twice, but yeah, that's how you learn, writing checks.
Very true. So we'll hop into our first segment here. What was the best deal you've ever done? What was the plan and what went right or wrong?
So after that, I did a 7-acre land development deal. And then I actually built the houses as well, right? So I've done some flips at this time, rentals. I'm not liking the rentals. I've done this new construction thing. I like that. What am I going to do next? So I go visit my parents, and they live in one of these bungalow villa plus 55 kind of retirement villas, right? So bungalow villas, right? Oh, I can do this again. God protecting the naive and the stupid. So anyway, so I sourced 7 acres of land here in Calgary, and it was zoned a single family home. And so I changed that to allow duplexes. And the density was 1 to 2 units per acre, and I changed that to 3 to 5. So what's the difference? Well, the difference is, as a land developer, before on that size of lot, I could have done 14 lots. Afterwards, I can do 36. As a builder, I can build 14 single family homes. Afterwards, I can build 36 duplexes. So you see there's a rise in value of the land. I haven't done anything yet, but I've increased the value of the land. So actually, at that point, I was actually offered a $400,000 profit to just walk away and sell it to another guy. Looking back, if I had that same opportunity, I'd do that all day long today. But I went ahead, no, I want to do this. So actually, cleared the land, put the pipe in the ground, subdivided into 36 lots, did all the legal part there, put in the curb and the gutter and the sidewalks, and built the internal road, you can pick, there's different style of streetlights. Who knew that, right? You can actually, there's multiple styles of streetlights that match the look and feel of your development. Who knew? Anyway, these are the things you learn. So I did that. And again, I could have sold those lots to builders, but I decided to actually go ahead and build the 36 units there. So that was, a really big project. But people ask me now, one of the things that takes a long time, right? Like, even if it went well, and it didn't, because I got caught in the 2006 boom, and then the 2007, 2008 housing crisis. So massive boom, massive bust. Managed to make it out alive, but barely. But one of the things that really Alberta has taught me over the years is in and out quick, right? Like, economies change, interest rates change, governments change, government policies change. Just all of a sudden life's going good, and then life kind of kicks you in the gut. So in and out quick is what I do. So basically there's 3 parts to that. To any land development deal, there's the upfront paperworky type stuff, changing zoning and density. There's the pipe in the ground, build the internal road kind of thing. And then there's the construction of the house. So don't do all 3. Like, there's a reason why land developers develop and builders build. And I found out why, because it just takes too long. So my advice to my students in that is pick a lane. You can do very well just by changing zoning and density and doing that kind of stuff. If you're passionate about putting pipe in the ground, do that. And if you want to build, by all means do that. But pick a lane and go hard, and don't try to be all things to all people. So again, lesson learned.
Sounds fair. Which one are you currently pursuing?
I'm interested in doing raw land development down in the United States, so Texas and Florida. And then I'm actually looking here in Calgary and Edmonton to do some of the shorter kind of just paperworky stuff, the in and out, just change zoning and density, or finding oversized lots. What can I do with that? So that's kind of where I'm at this point. I've really got no interest in physically building houses anymore. Like, I kind of bought that t-shirt. And so but I always did like the land part of it. Like, I guess I grew up on a farm, so maybe that part of land is in my blood, but I like dirt. So that's kind of where my thoughts are now.
Sounds fair. Out of curiosity, whereabouts was the farm?
Just outside of Edmonton, actually. So just north of Sherwood Park. So east of Edmonton there.
Very interesting. A couple of our podcast guests actually came from that area as well. So yeah, very interesting. It seems like that's a good place to learn about real estate investing.
I guess, yeah. No, like I said, I've done stuff in about 9 different jurisdictions all over Alberta. So yeah, I've kind of seen the good and bad of what bureaucracy can be. So
out of curiosity, whereabouts have you invested? I know you've mentioned Edmonton and Calgary.
So Edmonton, Calgary, Red Deer. And then I've also done stuff in Medicine Hat. I've done stuff in a little town called Caroline, which is a hamlet. That's actually where Kurt Browning, the figure skater, came from. The hockey arena is named after him. So it's a hamlet, like 500 people, and I owned 4 fourplexes there. So by my own accord, I think I controlled about 40% of the rental market in Caroline, Alberta. So I was kind of the boss hog of Caroline. And then I've also done Lacombe, and I've done stuff in Foothills County and the County of Rocky View, and then Strathcona County as well. So I've got some rural experience too.
How does it change investing from one of the major cities like Edmonton or Calgary to the smaller municipalities, the hamlets, the rural?
So just as an example, to get a development permit or zoning change in Edmonton's about 4 or 5 months. In Calgary, it's like 6 months kind of thing. I had a house, I had a fourplex in one of these fourplexes in Caroline, for example, that had an extra 50 feet on the side that I wanted to sever, and I wanted to build something there. So I went to the town office, which is just, you know, a job shack kind of thing. It's like a double wide trailer is town hall. And the lady comes up and I said what I want to do. And she says, well, if you give kind of a drawing, it didn't even have to be an actual blueprint. Give us a drawing and a written down version of what you want to do. And Doug and I'll talk about it over lunch. So, I mean, that can be the difference of approval process depending on where you want to be. So I thought that was a good story there. So,
Did you buy the lunch by chance?
I did, yeah. So Doug was the town officer, and so anyway, it was funny. Just come by, drop it off. Doesn't even have to be to scale or anything. Just tell us what you want to do, and we'll vote on it. So, okay. Funny.
Very interesting. I'm always interested in how the different bureaucracies in different municipalities work. And obviously, the smaller the population, the less red tape you have. So
usually, not always. It also, I try not to be political, but it can be quite, I always give the example of Vancouver, right? So, or is awful, to be quite blunt. And they're kind of a left-wing progressive government. So read that into what you will. It takes about 2 years. Vancouver's the same thing. Toronto's 2 years. An hour up the road in Langford, it takes 2 to 3 months to get approved. Parksville and Qualicum are 4 to 5 months. Nanaimo's 8 months. Souk is like a year. So it's interesting that just, literally across the highway or 10 minutes away, life can be entirely different. So in the course, we focus a lot on, making sure you're in the right municipality and the right community. Because even if you're pro-development, like let's say Edmonton's really pro-development, there could be communities or neighborhoods in there that aren't, right? Where the kind of the NIMBY, not in my backyard crowd rules, right? So you do have to kind of watch where, so if you've heard horror stories about development, it's too hard, it takes forever. It's probably because it's in one of these kind of cities that are really, really anti-development, or just the bureaucracy, right? So let's say the 2 or 3 month place, they'll ask you if, so give us this stuff, your drawings of phase 1 environmental, this, and this, and we'll kind of take a look at it. Toronto, that might be 8 pages of stuff that you have to do and all these environmental tests and whatever. And then it's going to go to, you've got to pass through 3 committees, for example, and then it's got to go to City Hall, and council has, 32 councillors, whatever, right? So it's just the level of, that's a lot more bureaucracy than Flo and Doug at the town office of Caroline, right? So, I mean, it's just the many layers of bureaucrats, basically. You're working at the speed of bureaucracy, so you want to be in an area where that's as small as possible.
It sounds fair. Do you have any advice for listeners who are having to deal with or potentially hopefully avoid some of those NIMBY neighborhoods?
Yeah, so there's a great example here in Calgary, a community called Glamorgan, for example. Now, on paper, it's perfect for my world. In my world, I say, traditionally all we learn in rental or real estate education is flips and rentals, right? So take an existing property, fix it up enough to rent it, or fix it up enough to sell it. And then variations on the theme, Airbnb, rent home, but it's all just rentals and flips, right? So I say, don't fix up those old buildings. If it's 1949 or earlier, tear it down. The lifespan of a wood building is like 70 years here in North America. For brick, it's like 90. So anything older than 1950, why are we fixing those up? I think the only reason we renovate those is because people don't know any other way, right? Like that's all we're taught, rentals and flips. Well, tear those down and replace it with something with higher density, a duplex or a fourplex, right? We've got this housing crisis where we're short like 5 million housing units across the country, 500,000 new immigrants coming in. Where is everybody going to live, right? So we need to really increase the density there. So as smaller investors, that's how we can help, right? So, but you've got that situation where like I said, I think unless it's architecturally or historically valuable, and almost, we all know that most of these older houses aren't. So just tear them down. So this Glamorgan is ideal for that on paper, 1950s, 50-foot wide lots, so nice wide lots. So very you can do a lot with that, right? But if you drive through it, there's zero new stuff, like zero. There's been some reno people fixing it up, but there's no new modern buildings there, right? So that tells me that the NIMBY crowd is really strong there, right? So what do you do to answer your question? Well, other areas of Calgary, if you drive through them, there's lots of precedent of newer stuff, right? So they've torn down a house and done side-by-side infills or semis, duplexes, whatever you want to call them where you are. Other places, other communities have that plus suited basements. So now there's a little fourplex on that 50-foot lot, right? Or, you know, they're building really aggressive, as I said, in Edmonton. And on a 50-foot lot, you can get 3 up and 3 down for a sixplex. If it's a corner lot, it's 4 up and 4 down, right? So again, so you're looking for areas where there's precedent, where people are already doing kind of some of the stuff. So main thing I teach in my courses, in and out quick. The second thing is, don't paddle upstream. What is the community and the municipality giving you? Like, what do they want, right? Because there's communities where you just stay away, right? But there's also initiatives like, for example, Calgary in October 6th, they created a brand new zoning code that allows suited basements. So you're going to see a lot more of these suited basements in more areas of the city. Well, okay, so obviously there's a desire by the city and certain communities to increase density. So work in those areas, or, you know, if they want to see a certain thing, even specific streets we teach, right? So maybe this street right now is a all single family home zoned that way, but, you know, there's a redevelopment plan or whatever that shows that the city and the community are on board for that being higher density. So now, you know, if you buy one of those properties and you make an application, you're probably not going to have too much of a fight because it's already wanted, right? So I get frustrated by when you read these news articles of people fighting for 2 or 3 years and then still getting denied. Well, stop fighting. Like, just go to where, if you want to do something specific, then find the area where that's allowed. Mm-hmm. If you don't care what you do, then you can work in an area, in this area they want this. Okay, well, I'm fine developing that or building that, right? So again, don't paddle upstream, work with what the municipality and communities are giving you.
It's amazing how working with the path of progress for municipal, provincial, or federal government makes life a lot easier, and they'll help you so much.
Why are we butting our heads against the wall, right? Like, just, okay, what do you want? Okay, I'll build it. I don't care. Right. I used to say when I was doing rentals, I don't care if the client wants black walls, I'll paint them black. Doesn't matter to me, right? So what's the path of least resistance, for sure?
Absolutely. And I know here in Edmonton, the city's actually giving grants to people who do want to build some of those developments. So right. Not only is they make it easy for you by helping you turn over the zoning, but they'll actually give you money to go do so.
Yeah. So, you know, and even, so Alberta's ahead of most of the provinces, but Edmonton's even ahead of Calgary. Like, even 10 years ago, St. Albert was giving a $25,000 grant to suite a basement, where at the same time, Calgary wasn't even allowing suite basements, right? So Edmonton's kind of always at the forefront. And even recently, they've come out, Edmonton City Council said, you know, we don't want to see this urban sprawl anymore. It's just getting too expensive. So basically they're saying 50% of every new application has to be within the inner city, because they're expecting as well, right? So how do you do that? Well, tear down old house, build higher density, right? So there's areas like Garneau, which is just south of the river, older community, 1920s, 1930s kind of building. The city of Edmonton just unilaterally went in and changed the zoning for the entire community to low-rise multifamily. So that's big neon lights to developers and builders. Hey, we don't want to see 1920s crap anymore. We want this to be new, right? So again, don't paddle upstream, right? Like, go where they want you to go, right? So yeah, it doesn't have to be these horror stories that we hear. You know, I kind of make it sound like it's easy. It's not, but I mean, it doesn't have to be as hard as some people make it. Some people just, I want to build this and I want to build it here. Okay, well, maybe not. So
very
have true. A little flexibility there. Yeah. So
great advice. So I want to circle back around to your best deal, the 7-acre land development deal you did in Calgary.
Yeah.
What were some of the other lessons that you did learn during it?
Again, the biggest one is don't do it all. The other thing that was phasing, right? So imagine I've got a rectangular lot, and it was basically a U was my internal road. So I've got lots coming off. It flows, it's very high on one side and very low on the other. So I had walkout basements, I had a park, I had really nice view lots and whatever, right? I'm a young guy, I don't know what I'm doing. I just want to get sales, right? We all just want to get sales. So all 36 units were available for sale. So what happens is the nicer units go first, right? For a lower price. Nobody knows me. There's no show home. There's no guarantee that this guy is going to do what he can do. So the prices start out low. That's always the way it works, right? People have no vision. So the people that have vision come in and grab the nice lots, right? And so what happens is then you have to do the utilities for the entire project, right? Because I sold one lot here and one over here and one down here and three over here, you know. So what I would have learned in the future is phasing, right? Okay, so the first, there's going to be 6 lots for sale here, period, full stop, and lower prices, right? So people come in and they buy those and I build those. So now I'm almost self-funding in a way too, right? Like I don't have this massive cost because now I had to upfront the cost for all the pipe in the ground and the road and the box and all that, right? So, but if you just do it a chunk at a time, so let's do this one here, and then the next 6 would be over here, and you kind of work down to your home run lots. So by now people can drive in, okay, yeah, no, he's for real. I can go in and I can see a show home, and wow, the quality's good. Okay, I like this. And they're willing to pay more for the home run lots at the bottom, right? So phasing was kind of the other big thing that I took away from that I would do that in the future as well.
That's wonderful advice, actually. I see lots of developers doing that here as well. I never thought about the cost that it would be if you did it otherwise. I just thought it was easier to get to.
It's you want the home run lots, so you want the big sale at the end, because that's basically where your profit is the last units. If you're building a tower, it's the top 2 floors that are the profit kind of thing. So, but yeah, if I can postpone the big costs of pipe in the ground and roads and all that, because it's quite expensive to do that level of developing. If I don't have to do the whole thing all at once, then that saves you a ton of money. And it doesn't save you the money because you're going to end up spending it anyway, but you can phase it. And like you said, for a large part, you can kind of self-fund. So your borrowing costs are lower and you run less of a risk of running into financial problems when the housing crisis of 2008 comes along. So yeah,
hopefully we don't have another one of those for multiple different reasons, but
yeah, no, those were scary times for sure. The funny thing was too is so I remember, so I'm going through the boom, right? And I can't get a plumber to save my life. I've got framers, and here's the thing too, is I'm building these houses and I'm incurring costs for framing, but I don't have the plumbers to back them up. I had a plumber, but July 1st, 2006, I get a call from my plumber. He had a 10-man company. He said he lost 6 employees that week. They went to other jobs for more money, right? So we limped along. I put out, I called 24 other plumbing companies. Only 2 responded to my calls. And the value of the price to do an entire both sides of a duplex was $6,000. The new quotes were like 24. Holy crap. So you kind of struggle along anyway. So I got through that. September of 2006, I'm literally sitting in the garage of one of the buildings on a stack of drywall, beautiful sunset. Okay, I got this. It's going to be okay. I'm past the worst of it. Not 3 days later, I get a call from the bank. You haven't heard of it yet, but it's going to be a big deal. The subprime mortgage crisis, it's coming. And your loan is up in October. Nothing you've done wrong. We love what you're doing, but our parent company isn't renewing any loans for smaller builders. So we're going to give you 45 days to get us the $2.5 million you owe us. But, we're going to be good about it. But yeah, we want our money back, right? And so, holy crap. So anyway, so that was a little bit of up and down and added to the gray hair. But anyway, so.
I would imagine so. How did you get that 250?
2.5 million.
Sorry, 2.5. I missed the decimal.
Yeah. So when you're in a project, so there was already a run up of costs because of the boom, right? So I'd already gone back to them once and say, I need more money, which is entirely, everybody was doing it. All the builders, all these costs had gone crazy, right? So they said, yes, they charge you more money for upfront fees, and the interest rate went from 6% to 10%. Now you're sitting there, you really can't ever go back to the same well twice. So if you're over schedule, over budget for whatever reason, and all this stuff was out of my control, too bad, so sad. Now you're on the hunt for a new lender. Well, that's exceptionally hard because, well, why did the first guy drop you? What's wrong with that? What are the skeletons in the closet that you're not telling me, man? Like, what's going on there? So finally, I found a new lender, but you know, the fees, the upfront fees they charge are stupid, and then high interest rates and already. So I managed to avoid financial ruin and bankruptcy by the skin of my teeth. You know, I found it, but it wasn't pretty. It wasn't easy. So, you know, the worst part of the journey, I was $10 million in debt as I was building, and then I hadn't made any. I'd made sales, you know, I'd had a lot of pre-sales, but nobody had moved in yet. So finally I started moving people in, and we got down to that 2.5. Luckily it wasn't, you know, at the 10 million stage, but anyway. So yeah, I've had, either through rentals or through this, yeah, I've been in debt $10 million on a few occasions. And you know, typically I don't have some people have a problem with that. I don't have a problem sleeping with that until all of a sudden you get that phone call. But
So turn my phone off is what I just heard.
Turn the phone off, yeah.
Sounds good.
That's another reason why just pick one of the stages, in and out quick. The more you can do to speed that up, the less of a chance you're going to get one of these nasty hooks on the end, right? So
very true. Very true.
Yeah, so I'm not trying to scare people away from doing it. Just be smart about how you do it. And
the shorter time frame you have, the less risk you have. So absolutely love that advice.
Yeah, and especially in you know, in kind of chaotic times like this with higher interest rates and stuff like that, strategies that allow you to get in out quick are much more valuable. And the more options you have, like one of the things, you know, with these micro strategies I teach in the course, you're not just flips and rentals, 2 or 3 options. You know, I give you another 9 or 10 options that you can work with. And the more options you have, both on the way in. So if I'm looking at that 1930s house right now, I look at it as a potential flip or a rental. Well, with my micro strategies now, there's 9, you know, can we change zoning and density? Can we knock down the house, split it into 2, make sure both sides are serviced, and then sell like I did there? You know, can I buy the one next door and do a little mini lot assembly? You know, does it have larger than average? You know, is it an 80-foot lot? You know, what can I do with that, right? So both on the way in, but also as exit strategies, right? So if you're doing a flip and it doesn't work out, really the only option is to kind of sit on it for a while as a rental. Now, if things don't work out the way you want, now you've got more exit strategies on the way out too, which is always extremely valuable. So that's really what I teach. And I don't guarantee that my stuff is magic. Like, no strategies work all the time everywhere. I'm just here to kind of give you more options so you can kind of navigate the waters better. So when stuff happens,
I like having more tools in the toolbox. So thank you very much, sir.
Yeah.
So I want to switch gears here a little bit. What's the worst deal you've ever done?
So I've had close to 1,000 tenants. Like I said, all these units, I'm completely out of rentals. I've sold all my rentals. They gave me no joy. Like, I really didn't like any of that journey. And then on my rentals and flips kind of world, I was always the on-site supervisor guy too, right? And so it was giving me a lot of grief internally. Like, I just hated to get it up in the morning. And because I wasn't land developer guy or landlord guy, and I wasn't on-site supervisor guy, right? So worst deals are having to do with rentals. Like, so we've had this we're out of it now, but from 2015 to 2021, we had a 6-year recession. And at the same time, you know, we're 25% growth in Ontario. We were getting our butts kicked in Alberta here. And so 2015 came around, OPEC changed the price of oil, vacancy rates go through the roof, rents drop, everybody moves back to Newfoundland, and it's not good, right? And over the next 5 or 6 years, costs keep going up, taxes keep going up, insurance went through the roof. They invent new utilities like carbon tax. So they're inventing all these costs, and the same time across my portfolio. So for most of 2014 to 2021, let's say I had like 150 doors as rentals on average, buying and selling stuff, but you know, kind of on average. And on average, my rents dropped $300 per unit times 150 units. So I went from making $10,000 or $15,000 a month positive cash flow to losing 20, 25 grand a month for 3 years. So do the math there. That's close to $1 million. Got a little better. I was only losing 10 grand for 2019, 2020, 21. So yeah, no, it was, the rents came back a bit, but not a lot. So getting stuck, buying a bunch of stuff in 2014 in some of these secondary and tertiary markets in Alberta proved not to be the smartest investment. So that's why I'm right out of rentals. Like A, I never liked it, and B, it's too up and down. You know, it was easy money in Ontario the last few years, and now people are finding out maybe it's not. But I still don't know. Like, it's almost impossible across the entire country to cash flow positively a single family home. So everybody's going to multifamily en masse. The dirty secret there is there's hardly any available once you get out of these courses, because if a multifamily cash flows, people aren't selling it. So, you know, so it's really tough to do the rental thing in Canada these days. I don't know how or why you would do it in Ontario with the tenant laws and the rent control issues that they have. Like, I don't get it. Like, somebody, I'm being serious. Like, explain that to me, why you even want a rental in Ontario. I don't get that, especially with the numbers, and like, people can just live in your house for free, like for months and months. Like, really? Like, what? So it's really just because we're Canadian and we're on the honor system that most people pay their rent. Like, apparently it's pretty easy not to pay your rent. So why would you put yourself in that position? Anyway, so my worst investments have always been kind of rentals, and I just, you know, that's kind of what the course is designed for, people that just got tired and bored of rentals and renovations constantly and dealing with tenants. And, you know, the tenant moves out, you go in and they were hoarders. Now you've inherited all their crap, you know. And I went to, you know, Rona once a weekday for 17 years because of renovating something, right? And so that gets a little old after a while. And I was the king of nasty too. Like, I would get these buildings. So, you know, as a rental, you can get appreciation, you get cash flow, you get mortgage pay down. So there's those 3 ways to make money. There's also the fourth way, if you buy at a lower, you buy crap and fix it up. So kind of sweat equity. That's what I did. So I had buildings that were, you know, flood damage or fire damage or grow ups, or, you know, where the last person that lived there was cat lady with 14 cats, or hoarders, you know, there's a 5-year-old pizza and a dead squirrel in there somewhere. And then, you know, I had one building where there was mushrooms and grass growing on the carpet. So I was the king of nasty, and eventually you just kind of get tired of that too, right? So there was a flood, right? It was a building that I bought in foreclosure, out of foreclosure, and it had been boarded up for 2 years. The roof leaked, so there's mold everywhere and mushrooms and grass, right? And so I did it not because I liked it, but because that's made money for me. So everything I did was for the money, and that's a horrible way to. That's kind of one of the things I teach now too, is make sure your strategy, whatever it is, aligns with who you are and your personality and what you like. Because this should be fun too, right? It shouldn't just be about the money. And I got to the point where I was doing huge volume and huge scale, and it was all about the money, right? And I hated most of my journey. So now I only focus on the stuff I like, and then I delegate. I'm not on site supervisor guy anymore. I'll let other people. I let the professionals do what they do best, kind of thing. So.
That is a wonderful plan. I know personally, I find real estate investing super, super exciting. I often say I have a real estate addiction, but I only touch the things that I like to do. We have a couple of short-term rentals. I know nothing about that world. We let the experts deal with that stuff, and I do what I like to do. So,
yeah. Very smart.
I learned. Pardon me. So, out of curiosity, you mentioned this huge portfolio that you were getting rid of over the last, we'll say, 7 years here. How did you go about exiting out of that?
To be honest, during the recession, it was almost impossible too. Like, I had, you know, those fourplexes in Caroline. I listed them with MLS, so Real Realtors, wasn't for sale by owner, July of 2017, and I sold them in 2021. It was listed on MLS for 4 years. Nobody wanted it. And it wasn't that I was holding out. Like, I was literally at the end, the last 2 years, it was a dollar over mortgage. as was most of the other stuff, the stuff in Lacombe, all this other stuff. Like I was just like, I'm losing money hand over fist. The economy's not turning around. Sell. I'm not stupid, but nobody wanted this stuff. And so, you always hear these guys joking, well, if I could find stuff $1 over mortgage, okay, well, there it was. Nobody wanted it. So because we're in a recession, right? Everybody says, well, I don't want to own stuff in a recession either, right? So it finally took a little uptick in the market here in Alberta in 2021 before people, okay, I'll buy it then. So literally I was on the hook for this stuff. So, you got the other guys, the other gurus that are all about rentals that, well, you can buy it, and even if it goes down a little bit, that the market's going to go up. Well, not if you're in a 6-year recession in Alberta, right? Like that just didn't work. Like, so the numbers were never, the value of the buildings were never going to get back up to where I bought, like ever. So it's frustrating every time you write a check because a boiler, there's 10 grand because a boiler need to be replaced. You're not getting that money back. Like that's just money out the door. You're kissing it goodbye, right? So at that point, yeah. So if you're in a market where you're 25% growth every year, year after year after year, you can fall down and make good money. It's not that hard. But if you're in other areas, it can be tough. And that's the down part of Alberta. Like shit happens, right? So you look at Saskatchewan and Manitoba, and they're just kind of, nothing exciting happens there, which is good. Ontario, you get this, Vancouver, you get this, but then you get the occasional that. Alberta's this. So pick your poison, I guess. Again, with Alberta or with Ontario and BC, you got to deal with the rental laws. So I'm just, as you can tell, I'm a little off rentals these days. So
That's fair. I quite recently have decided I'm actually going to be getting a property manager to take care of mine too. I'm just tired of dealing with tenants. Not that they're not nice people. It just takes a lot of time and energy and care away from what I am really passionate about. So,
and people ask me, well, didn't you have managers? Yeah, of course. Like I don't live in Lacombe or Caroline. Managers take a lot out of your pocket, right? Like they charge a lot for not doing a lot, to be honest with you. So I would end up firing my apartment project, or they'd fire me half the time, because I'd get Darcy, tenant moved out, it's time to redo the suite. Yeah, I agree. Let's do the floors, paint. Yeah, it's time to redo that suite. They'd give me an estimate, and it was literally 2 or 3 times what I could do it for because I had my own crews and all that. Okay, well, don't worry about it. I'll do it. Well, actually, sir, we don't allow our clients to renovate their own house or their own apartments. I said, well, then we got a problem because I'm not paying that. And so, like I said, I got fired a lot. Anyway, so typically what I would end up doing is just hire my own people, putting out on Kijiji and looking for an apartment manager. And so, I would still deal with anything to do with money, and I would verify the application and I'd approve the people, and they'd take care of all the on-site stuff. But that's kind of how because 150 doors is a lot, right? And so when you get to that scale, you can't just kind of let the property managers run rickshaw over what you're doing. So I'm not a big fan of property. I've managed stuff, so I get it. Like it's not an easy job, but like they charge a lot and tend not to give a lot, to be honest with you. But anyway,
sounds fair.
It's totally off rentals. I tell you, just hated that entire journey, like every second of it. So.
And that's fair. It's not for everyone, and for you and I, it sounds like that might not be the best path. So
people come up to me, but I love my tenants. I said, well, you got 3, like, so try having close to 1,000 and see if you're still on that same train. But anyway, so
I personally wouldn't be.
Yeah. But that's what you're taught, right? That's all you know. Okay, you're gonna do rentals and flips, like pick your poison, right? And so we do a really bad job, I think, as an industry, welcoming new people in and giving them all the options, right? Because if you Google real estate investing, everything comes back rentals and flips, all the podcasts, rentals and flips, like everything, like you said at the beginning, like listen to Darcy because he's different. Like nobody's talking about these other options, right? That you can, lend, most people think rentals and flips and I can't do anything else. So if they don't like it, they kind of just leave the industry, right? Or, well, I've heard about land development, new construction, but that's too hard. It's for the big boys, whatever. They don't realize that, with these micro strategies that I teach, you can you can buy a 1930s piece of crap on a 50-foot lot and tear it down. So, everybody else is fighting over the few rentals and flips that are viable in this sandbox, where here, there's an endless supply of old pieces of crap and nobody's playing in the sandbox, right? So significantly less competition as investors, right? And the other thing now is, if you were to tear that house down and build a sixplex, now you've got all these multifamily course students that are graduated and looking for crap that you can sell to. But I mean, that's another.
A very high demand right now, especially in, I don't know if it's official or not, but they're calling a recession here in Canada. So you get a whole bunch of people flocking to that multifamily because they think it's more stable, and you're literally creating a product for them. So absolutely
Yeah,
love
and
it.
like I said, there's nothing out there. That's the dirty secret of these multifamily courses, is that nothing's available. It's really, really hard to find stuff because everybody's looking at multifamily now, everybody, right? So it's really, really hard to find that product. So if you can't find it, maybe make your own. Right? So.
That's one of the thoughts I had. If it's okay with you, I want to dive into some of the micro strategies that you teach. I know that's completely off our script, way out, but you do such a fantastic job of describing them. Would you be able to just give kind of a quick overview of some of them?
Sure. So picture in your mind a 1940s 800 square foot little bungalow, right? A little tiny thing on a 50-foot lot. So what can you do with that? Well, right now it's just rentals and flips, but what if you change the zoning or density or usage to allow that to be a fourplex, right? Just change zoning and density, sell that to a builder. You don't have to do anything on site. Next step, knock it down, split the lot in two, make sure both sides are serviced, sell those lots to a builder as an option. Next step is, okay, let's actually get an architect to design that fourplex and get the building permit approved. So now you've got the zoning and density changed, you've got the actual development permit, you've got a zoning permit change, you've got a building permit now. Well, that's a shovel ready project you can sell to a builder. They can literally demolish the house tomorrow, right? Other thing, okay, so maybe I'm on a 35-foot lot, and so everything on the street is 35-foot lot. Well, what if I buy 2 or 3 of them, amalgamate that into a 105-foot lot in the inner city? Now that has value to a builder because they're not seeing that kind of land size anywhere else, right? So there's a value add for you. So basically, we're switching our mindset that the value is in the building, which is where we are as landlords and flippers, to saying the value is in the dirt, right? So how do I get highest and best use? How do I bring out the value of that piece of dirt, right? Let's say it's the opposite. Let's say it's 75 or 80 feet wide lot. What can I do with that? I can sever off the excess and sell that. Maybe I can tear down the house and split that into 3. Maybe I can do all kinds of stuff, right? So what are the options there? Those kind of things that we teach in the course, is being creative and what can you do with that? The next step is maybe it's a 1960s house and it's kind of in that gray area whether it's okay to tear down or not. Maybe you can suite the basement and throw a garden suite in the back, or a laneway house in the back, right? That's big in both Ontario. The Ford government's just said basically almost everything can be you can have three units on any lot, and they just are announcing that in Victoria too. I just heard too. So that's an option too, right? So as I'm looking for ways to increase my rent, if I want to be a landlord, suiting the basement and building something in the back now gives me 3 sources of income for significantly less than it would cost me to buy 3 doors, for example, right? So things like that. So, and then there's pure raw land development too, if you want to get into that, like physically taking 5 acres and splitting it up into 30 units and putting pipe in the ground and all that. So all of this various steps is kind of what we teach in the course. Yes.
Very cool. Very cool. And do you need any special certificates or for any of these strategies?
No, you need, if you're going to build yourself, you need stuff like that in certain areas, but I say don't. Like, you're more valuable as an investor finding the next opportunity, right? So our work is up front, finding the next deal, finding the right community and municipality, finding funding, whatever we're going to do. Once you get to the point where you're going back and forth with the city, let your team do that, right? And then if you're going to physically do work on site, let the professionals do that as well.
What kind of team members do you suggest people have?
Well, you need a realtor for sure, a good realtor that kind of gets it, that gets this world. You're going to need a mortgage broker that understands this world as well, because it is a little different. The funding is a little different than rentals and flips. But then you need a civil engineer or a planner, depending on where you are. They are probably going to have on staff a surveyor. If you're going to do the part where you're actually designing the new fourplex, for example, then you need an architect. So those are kind of the team, you know, along with the normal accountant and lawyer kind of thing.
It sounds good. And one of the terms you brought up earlier here was highest and best use. Do you mind just breaking down what that is?
Yeah. So what can you do on that lot? So highest and best use is what's the best you can do with it? Maybe both physically, what are all the things possible? What's allowed by your municipality? Like, so you want to do this, but they're only going to allow this, right? For example, what can you afford financially? Right. So it's basically almost stream of consciousness. What are all the things I can do with this lot? And then what can I afford to do? What's the city going to let me do? What can I financially do? What can I physically build? And then, you know, so I'm going to suggest that given our housing crisis, a 1940s 800 square foot piece of crap on a 50-foot lot isn't highest and best use for that 50 feet. So just going to throw that out there.
It sounds fair. And for all the listeners out there, highest and best use is actually the first thing that appraisers look at here as well when they're determining land value, no matter what they're doing with it. So
right.
Thank you very much, sir.
But if you're buying a house, like just a normal house, like on MLS, appraisers don't look at zoning. They're just appraising it because they're assuming that family lived here before, family's going to live here after. So the banks don't tend to get into zoning and order the appraisals, right? So if you can find something that's zoned single family home and you know that the city wants it to be multifamily or higher density, you can typically get it at a lower land value and increase the value that way, right? Because that's not something that traditionally the appraisers look at. So.
Yeah, it's not in their scope of work.
Yeah.
Sounds good. So I want to switch gears here. If it's okay with you, we're actually rolling out a new segment here. Okay. What are 3 things that most people don't know about you?
Actually, most people don't know me because I'm based in Alberta and I've been lone wolf guy all these years. So nobody's heard of me at all. Like I'm not one of these guys that's been on stage for a long time. Like I've been on stage before, but so basically nobody knows me at all. So that's kind of part of this is just, I think different. Like I'm not the typical rental and flip guy. So other than that, you know, I'm getting to the point where, you know, done well and I'm just bored and tired of the traditional. So yeah, I'm teaching new stuff. So I played at a high level for a lot of years and now I'm getting a real kick out of teaching other people how to do it as well.
Very cool. Very cool. If I remember correctly, you've also done a very interesting racetrack deal.
We have. Yeah. So basically there was a new racetrack and casino built in Northeast Calgary, right next to Cross Iron Mall and all that. And I was brought in, we were in creditor protection. So basically Chapter 11. So we were like $108 million in debt. And the team before me had kind of tried to build this Taj Mahal and stumbled with the downturn in 08 and 09. So I was brought in to kind of turn that around. And then we did. So now we partner with Century Gaming and out of Austria. And right now it took some time, but yeah, there's a beautiful track there and horses are running around the track and people are putting money in slot machines. So it was turned out to be a really, really good thing.
Sounds good. I hope I hope it's okay I brought that up and sounds good. And I'm hoping some of the listeners can reach out to you about that later on. Yeah. We're getting to the end of our show here, so I want to try and wrap up.
Yeah, I got another call here at 10, but anyway, so or my time. Yeah, so.
Sounds good. Did you want to break it off?
I can go until the other person shows up, I guess. So, yeah, so.
Okay, I have one last segment here. What advice would you give to new investors in your area who are looking to scale their business?
So basically, yeah, don't just pick the strategy first. Like, don't just do some investigation into all the different strategies and figure out what matches your personality best. You know, there's pros and cons with everything, even the micro strategies. But again, my belief is that the more bullets in your gun that you have, the better. But don't just go right into flips. Don't go right into rentals. Don't even go right into my stuff. Like, what is going to make you happy so you can make money from the investment and have fun doing it, right? Because let's not be like me and just do everything for the money. The other part is I was lone wolf guy, as I said. So have an operational partner, like whether it's a family member, your spouse, partner, whatever, somebody who's strong where you're weak and vice versa, right? Like I should have had that. I was really good at the hunt and finding stuff, and I needed an operational partner, right? So I should have had that yin to my yang. So that's really important. I stress that all the time, and focus. So I was all over the place and didn't benefit from that. It was all about the money. So the next potential project, does that look like it's going to make some money? All right, let's do that. If you focus on one thing, you get efficiencies, your team gets better, you know what you're looking for, you become known for that thing, so people will bring you deals. So focus. So those three things, like, because personality matches your strategy, focus, and get an operation partner.
Very good, very good. Thank you very much, sir.
Of course.
And just before we close out here, where can people find out more about you?
Just go to my website, so darcymarler.com. All the books and the courses and all there. I've got a webinar. I'm on YouTube every week. I do a YouTube video, so you can subscribe to that and start learning about this development world. And again, it's not just for the big boys. It's you can scale it down to that 50-foot lot. It doesn't have to be 5 acres, and there's all kinds of strategies that let you get in for not a huge amount of money. So it's actually a lot of pluses. Great return on time too, because again, your team's doing most of the work. So per unit, you're probably making more per project and spending much less time doing it. So we don't always talk about return on time either. We talk about return on investment all the time, but not return on time. So again, I think differently and bring some different things to the forefront, I think. But
sounds good. Well, I will let you go. I do want to hop on that return on time, maybe another time that I can interview you.
For sure.
But Darcy, thank you very much.
No worries. I really, really had fun. I appreciate it. Thanks, Jeremy.
Thanks.